Hey everyone, happy Monday. I am back with another Monday market update. I'm Caitlin McKegg. I am a real estate broker here in Phoenix, Arizona. Thank you so much for coming to my channel and checking out this video. As always, I am going to talk about what's going on in the Phoenix real estate market, as well as a few things that are going on in the economy. We have some news from the Fed as of Friday. So we're going to dive into that. If it's your first time, hit the subscribe button and the bell for notifications. If not, thank you for coming back. I appreciate all your support. So let me take my name off here because I forgot to do that last time, and we'll just take this off as well. I'm going to share my screen and we're going to start talking about what happened with Jerome Powell on Friday. So if you all have paid attention to this, Jerome Powell says the Fed is ready to bring some pain to households and businesses. These are the unfortunate costs of reducing inflation. So basically on Friday, the Fed spoke and talked about how they don't want you to get it twisted. Okay. They are going to continue to be very aggressive with hiking the federal funds rate in order to fight inflation. And although last month's CPI numbers were an improvement, inflation numbers were an improvement. The markets reacted in a positive way, and the Fed was kind of like, no. Don't think that we're going to ease off. We're very serious about getting this under control. And what that means is we're going to continue to hike interest rates until we see a significant decline in inflation. So it was a little bit of a bleak outlook from that standpoint. As of this morning, it sounds like the speculation is that it'll be another 75 basis point hike. This does not happen until September, so we have some time to see what takes place. We'll get additional jobs data. We'll get more CPI data before they meet. So we'll see what happens. But bottom line is don't expect the Fed to ease off on hiking interest rates. Now, as we all know, and as I mention every week, the federal funds rate doesn't affect mortgage rates directly. So mortgage rates kind of are in reaction to market conditions. So it's not just because they hike the federal funds rate, your interest rate would go up. What happened with mortgage rates last week, they didn't do too much. So kind of hanging around the same place that they've been, which is good because for a while there, we were seeing some pretty big hikes in mortgage rates. But for now, they're kind of hanging out. So we'll see what happens this week with this news from Friday and as things go throughout the week. So that is your news on a national scale. I'm just going to get right into talking about what's going on in Phoenix because we've got some good stuff to talk about this week. So if you're new here, a lot of this information that I share is from the Cromford report, which I'm a subscriber to, and they provide tons of wonderful info for their realtor subscribers. They really break down everything that's going on in the MLS into some awesome charts and graphs for us to use. And one of the things that they talk about that I always share on this channel is the Cromford Market Index. And the way that this works is any reading on this index between 90 to 110 is a balanced market. So if we look at this number here, 106.5, that means we are in a balanced market. And this is for the greater Phoenix area. If any reading on here is below 90, it is a buyer's market, and above 110, it is a seller's market. So as you can see, all of our indicators on demand and on supply are below 100. They're below 90 and getting pretty close to one another. So supply is sitting at 74.4. Supply is the number of homes we have on the market. And then demand is sitting at 79.2. And so that's the amount of buyer demand that we have in the market. Both of these numbers are pretty close to one another, which is why we are technically in a balanced market at 106. So I get the question a lot of what number do we have to hit to be in a balanced market? It doesn't matter. Both of these numbers could be 120 and we'd be in a balanced market. As long as supply equals demand, you're in a balanced market. So their range of balance, because it's not just a perfect number, like I said before, is 90 to 110. So 106 falls into that balanced range. So as we look at the greater Phoenix market, We are in balance right now. Now, there are some cities that are in a buyer's market and some cities that are in a seller's market. And I'm going to go through that in a little bit. But overall, this index is showing that Phoenix is balanced. So we'll see what happens here. The supply has been continuing to creep up. This is saying that we're only about 25% below normal for our supply, so for homes on the market. And then our demand has been going down. So we're about 20% under or below normal for our demand in the market for this time of year. So we'll see what happens, because I want to talk a little bit about our supply, because we're starting to see a little bit of a slowdown in new listings coming to the market. Before I get there, though, we're going to switch over here and we're going to talk about this listing success rate. Let me see if I can make this a little bit bigger for you guys. So it's been a few weeks since I talked about this. And I brought this up a while back because we were seeing, obviously, this start to go down pretty significantly. Let me take my stuff off here. And I'm just going to come off the screen so you guys can see this a little bit better. So the listing success rate is exactly what it means, or what it says, how successful a listing is once it hits the market, whether or not it sells. So if we look back in March, we were at a 92.2% success rate. And we go down here to where we're at today, we're at 70.4% in terms of the success rate. So that means that 30% of homes that are listed actually don't sell. They're not successful in selling. And back in March, we only had 8% of homes on the market that weren't successful in selling. So it's a pretty stark difference, but I do want to compare to 2010 here. At this time of the year, we were at 58.1 in 2010. So what's interesting, though, is this number of 70% in August is the lowest August that we've had since 2010, when we were at 58.1. So definitely going back in time a little bit in this market as to how this is reacting. And you got to keep that in mind. If you're selling your house, know that 30% of homes are not successful in selling right now. So be prepared to have a great marketing plan with your agent, as well as a great strategy on pricing, providing incentives, whatever it takes. If you need to sell your house, there are a lot of things to think about, and you really have to be active in this process. So that's where our listing success rate sits today. Now, let's talk about the number of homes on the market, because what we're starting to see here is this number going down a little bit. And so that may change the listing success rate for a few reasons. And I'm going to talk about that in a second. So I wouldn't be surprised if that listing success rate starts to go back up over the next few months. But for now, it's at 70%. So keep that in mind. New listings by month. Let's go to August. We're at 7,900 new listings this month. Today is August 29th. So we're pretty much at the end of the month. I don't think that we're going to see another 3,000 to have us hit 10,000 for this month. So I think it was last week, maybe it was the week before, I was talking about how we likely weren't going to hit the same number of listings this month as last month. We weren't tracking towards that. And, again, that looks to be correct. The month prior, we had 12,000 new listings, 11,000 new listings. So since June, we've seen quite a significant change this summer of new listings coming to the market as compared to earlier this year, because we were at the 8,000 mark early in the year. And so now at 7,000, we may cap out at 8,000. I don't know if we'll even get there in the next few days. So August obviously saw a decline in new listings coming to the market. And we're also, let's just look at our active listings. I talked about this last week, and where we stand here, this is starting to plateau a little bit as well. We're at 19,000 active listings. You can see this curve here. We're not continuing to shoot upwards as we had all summer long. So this is to level out as well. The point here that a lot of the reason for the slowdown in our market is we saw a lot of new listings hit the market, and then we saw a lot of buyers say, heck no, interest rates are moving too fast and going up too high. I'm just going to wait it out, or I can't afford to buy anything. So our demand fell off a cliff at the same time that our supply increased significantly. And now we're starting to see this slowdown of supply coming to the market. And we're also starting to see some buyers coming back into the fold since there was some stabilization with interest rates. So again, thinking about supply and demand factors, as demand comes closer to supply, we could possibly start to see a bit more normalization, maybe even dipping back into a little bit of a seller's market. That's what the Cromford report is saying. They're saying that if we start to see these two things, listings slow down and buyers come back into the market, we might dip into a bit of a seller's market again. So I don't know. It will really depend on what happens with interest rates, because as I mentioned, with all the news from the Fed, if rates go up significantly again, that kills that whole idea. There are a few cities, though, that had an improvement in the amount of, or actually not an improvement, they actually had supply going down in these cities. I'm going to show you Chandler, Gilbert, Glendale, Mesa, Peoria, Scottsdale, and Tolleson are all cities that we saw week over week have a decline in the amount of listings on the market, which is interesting because we have not seen anything like that all summer long. Everywhere has been increasing. So watch these cities, because these could possibly be the first to go back towards a seller's market if they continue to lose supply and our demand continues to increase. Thought that was interesting. Kind of the first signs of another change. I don't know. We'll see. So that's where we're at as far as our listings are concerned and the supply in the market. And now what I want to do too is show you guys every single city, as I always do. Got to switch out here. Put this on a Word document because it would just be a little bit easier to share. Because I actually want to show you guys exactly what the Cromford report is saying specifically. Instead of just reading it to you, I wanted to talk through it. So first, here we go. Here's all of the cities and their respective CMIs. We still have Paradise Valley, Fountain Hills, Scottsdale, and Cave Creek leading the way with fairly strong, especially Paradise Valley CMIs at 190. So very much in a seller's market. All of these, Phoenix is the first city to be in balance on this list, and everything Phoenix and below is either balanced or a buyer's market. Everything under Peoria is technically in a buyer's market. So Chandler, Tempe, Surprise, Gilbert, Maricopa, Queen Creek, and Buckeye, all in a buyer's market. And then our balanced market is this kind of middle section here from Phoenix to Avondale. So every city is, going down, having a different, a downward change every week, or month over month as we look from week to week. And so I'm going to scroll down here so you guys can read exactly what I am reading. And this is directly from the Cromford report. There's just some things that are better for me to share directly from them than trying to talk through. So the average monthly change in the CMI was 20%. So everything went down 20%. On average. This is another improvement on the week before when the reading was 25%. Although we're still seeing deterioration for sellers over the last month, most of that happened in the first 2 weeks, late July and early August. The deterioration has slowed markedly during the middle of August, and CMI readings are falling much less quickly now. The decline over the last week was only 2.5%. A few cities are even seeing their CMI rising in the last few days, including Paradise Valley, Chandler, and Tempe. Now, remember those cities that I talked about that were seeing a decrease in supply? Chandler was one of them. And I think that was it. That's the only crossover. But that's interesting to point out. This is the first significant silver lining to the dark clouds that have hung over the market since April. Demand has picked up in some areas in the shape of increased numbers of listings going under contract. This is most noticeable in Chandler, Mesa, Phoenix, Tempe, and Paradise Valley, but it has also occurred to a similar extent in Glendale, Gilbert, and Surprise. In addition to improving demand, new supply has weakened to below normal. Only a few weeks ago, new listings were arriving at a very fast pace, but this seems to have subsided now. So as I showed you guys, that's what I was talking about with new listings. Some areas remain heavily balanced in the buyer's favor, but overall, the market looks ready to settle into this more stable situation if current trends persist. Paradise Valley has overtaken Fountain Hills to make the number one in our table. The top 4 slots are occupied by the 4 most expensive of the 17 cities. So that's always kind of been the trend. These 4 are the most expensive cities in our market and staying the strongest. So all in all, every city on average is seeing a slowdown month over month of a smaller slowdown than what we've been tracking over the past few months. We're also starting to see fewer listings come to the market. We're starting to see an uptick in buyer demand. And they're basically saying maybe this is where we're going to settle in a balanced market if things continue in this direction. But it is interesting to watch out for a few of those cities that started to see their CMI rise and a few of those cities that started to see supply go down. So we may be at another turning point. We may be at a point where we may just be at a point where we're kind of hanging out. We've finally arrived at the destination. If you ask me, I think we may hang out in this area for a while. That is dependent on interest rates, however, because if things go crazy over the next few weeks with interest rates, all of that, prediction kind of goes out the window. So anyhow, that's what I've got for you guys today. I hope all of this is helpful. If you have any questions as it relates to real estate, feel free to reach out to me. In the description below, I have a few different links, a relocation guide, search my MLS, and you can also get an instant home valuation. So make sure to check those out or book a time to chat with me if you have questions about real estate. So that's all I've got. Thank you for joining me this week, and I will be back later in the week with some more real estate information as it relates to Phoenix. Thanks, guys. I'm Caitlin McKegg with the Desert Dreamers team at HomeSmart.